Have you ever felt that unique blend of excitement and mild chaos at an airport? You know, the rush to security, finding your gate, and then that crucial moment when you realize you need food. Or maybe just a quiet space to decompress. It's a universal part of travel, right? But behind all that activity is a meticulously managed world, food services. Today, we're taking a deep dive into that very world. Specifically, we're focusing on Travel Food Services Ltd, or TFS. They're India's largest operator of quick-service restaurants, and QSRs and lounges and travel hubs.
That's right. And our mission here in this deep dive is really to extract the most important insights from TFS's recent Q1 FY26 financial results. We've gone through their official investor presentation, their press release, the outcomes from their board meeting, and even their very first earnings call transcript since they went public. It's quite a lot of material. We're trying to go beyond just the raw data, you see, to understand the why behind these numbers. And maybe most importantly, what's next for you, the traveler, and, well, for the broader travel and hospitality landscape.
Okay, so let's open up this treasure chest of information then. TFS has just reported its Q1 FY26 results. And it's their first quarter as a public company, so there's quite a bit to explore, I imagine. What are the big financial headlines? What stood out immediately?
Yeah, and what's truly fascinating here is that even with what they're described as temporary sector headwinds, challenges we'll definitely get into, TFS delivered a remarkably healthy performance. I mean, really solid. Across all their operations, what they call system-wide sales, hit over 7.15 billion Indian rupees. That's strong, like 26.7% growth compared to the same time last year. And when we look at their profit, their adjusted consolidated profit after tax, or POT, that grew by nearly 20% year on year, reached about 950 million rupees. Now, you might see a much higher reported profit growth figure floating around, but that almost 20% growth, that's a more accurate sort of apples-to-apples comparison. It adjusts for a recent change in their business structure with a joint venture they deconsolidated.
Okay, that adjustment is important context then. So they're growing revenues, profits. But how efficient are they? Turning those sales into actual earnings. What do their profitability margins tell us?
Right. This raises an important question about their operational efficiency, doesn't it? Their EBITDA margin, that's earnings before interest, taxes, depreciation, and amortization, a key measure, It actually improved significantly to almost 39%. That's up from about 35% last year, so quite a jump. And their PAT margin also increased to over 25%. They attribute this leap to things like more efficient procurement, smarter supply chain management, and, well, a continuous focus on optimizing their processes, which basically lowered their operational costs.
And financially, how stable are they looking? Is there any significant debt that might, slow down their future ambitions?
Quite the opposite, actually, which is incredibly healthy for a company looking to grow. They reported zero consolidated debt, zero, and a very strong cash balance, over 6.8 billion rupees as of June 30, 2025. This shows a really robust financial position, you see, ready to fuel their expansion plans without relying on borrowing.
Okay, shifting from the big picture numbers,
Yeah.
let's dig into how they're actually achieving this growth. Is it mostly from opening loads of new places, or are the existing ones doing better too?
It's definitely a powerful combination of both. Really firing on both cylinders there. They're like-for-like sales, or LFL, that measures growth in outlets open for at least a year. That grew by a healthy 12.5%. And this is crucial, right? Because it tells us that existing stores are getting more popular. It's not just growth from, cutting ribbons on new locations.
Like your favorite coffee shop just getting busier.
Exactly. On top of that, they had what they call net contract gains. That added another 10.1% to their growth. This basically means they've won new bids or taken over existing spots, bringing 57 new travel QSR outlets into their portfolio over the last year alone, especially at major airports like Mumbai, Hyderabad, Ahmedabad, and Lucknow.
Okay, here's where it gets really interesting for me. They mentioned temporary sector headwinds. What exactly were those challenges, and how did they still manage such impressive growth despite them? That seems counterintuitive.
Indeed. This is a crucial point, and it really highlights the resilience, I think. Passenger traffic at airports where TFS operates in India grew, well, moderately, just 4.5% year on year in Q1.
Only 4.5%? That's quite slow compared to their sales growth.
It is, and the slower pace was largely due to broader geopolitical tensions and specific aircraft maintenance issues, particularly after the unfortunate Air India plane crash towards the end of the quarter. So despite these external pressures that definitely slowed passenger flow, TFS's ability to drive sales in existing units and strategically open new ones, that combo allowed them to achieve significant overall growth. The good news, though, management noted they're already seeing recovery trends starting from August. They expect things to return to normal by the second half of the fiscal year.
So even with fewer people actually flying through, their operations just kept pushing forward.
Yeah.
Can you give us a more concrete example, like specific initiatives that help them not just survive, but really thrive in that environment?
Yeah, they're clearly hyper-focused on efficiency, and it shows in the numbers. For instance, their gross margin jumped to an impressive 83%.
83%,
Uh,
wow.
Yeah. And this wasn't just luck, right? It was driven by smarter procurement, getting better deals on ingredients, supplies, and really fine-tuning their supply chain to lower costs. Beyond that, they actually reduced their other operating expenses by nearly 2 percentage points as a percentage of sales.
Okay.
And this wasn't just about, cutting corners. It involved a continuous review of their processes, strict operational discipline, stuff like that. These disciplined financial moves significantly boosted their profitability, even when passenger numbers were a bit subdued.
Okay, moving beyond the financials. What's new on the ground for us, the travelers? Are there new food options? Or ways they're making the airport experience genuinely better?
Right, this is where their strategy really comes to life for you.
Hmm.
As of June 30th, 2025, they've hit a pretty big milestone. 454 travel QSR outlets and 37 lounges operational across their system. And looking ahead, they have over 70 more outlets actively under design and construction right now, including at the big upcoming airports, Navi Mumbai and Noida. That's a massive expansion pipeline.
That's a huge footprint. What about the food itself? Any exciting new brands joining their portfolio? Things we might soon see on our travels?
Absolutely. And this is truly exciting, I think. They've expanded their brand portfolio to 130 different options now, added 13 new brands just in the last year. This includes launching India's very first Nando's airport outlet that was at Delhi Terminal 3 back in May.
Nando's in an airport.
And get this, they're soon launching the first ever Gordon Ramsay F&B concepts in India.
No way. Gordon Ramsay.
Yes, at Delhi Terminal 1 and Mumbai Terminal 2. Imagine grabbing a meal from a Gordon Ramsay concept before your flight.
That's unexpected.
Right. Plus, they've also recently opened popular chains like Chayo's, Wow W Momo, KFC, iLai.com, and Cumin by Taj Hotels at various airports, too.
Gordon Ramsay in an airport, that's a bold move. What does bringing such a high-profile, often, high-end brand into an airport signal? Is it just about prestige, or are they seeing a real shift in what travelers want?
That's an excellent question. I think it signals a clear understanding of the evolving traveler. It's not just prestige, though that's certainly a benefit, isn't it? It suggests they're seeing a segment of travelers willing to pay for a premium, a differentiated experience, even on the go. It kind of indicates a move beyond just pure convenience to making the airport a legitimate dining destination in itself.
Interesting.
And speaking of premium experiences, their lounge operations are also evolving significantly. The focus is on seamless access and, elevated services. They've expanded to 37 lounges globally now. 4 new ones in India, 2 internationally, Hong Kong and Kuala Lumpur. In fact, their global lounge at KL International Airport recently got recognized by Etihad Airways for exceptional service.
And I heard something about them making lounge access easier for credit card holders.
Yes, and this is a particularly forward-thinking development, I think. They've transitioned to a direct partnership with American Express for lounge services. They moved away from using an aggregator, you see.
Ah, okay. Direct connection.
Exactly. And crucially, they've also developed a new tech platform. This allows for direct connections with banking and credit card network partners, essentially cutting out intermediaries.
Right.
Which means they can offer more tailored, seamless solutions for different customer segments. It promises a much smoother lounge experience for passengers using their cards.
That really could change how we use airport lounges, make it much more friction-free. Any interesting marketing efforts they've undertaken to engage travelers directly?
They're certainly thinking beyond just the transaction itself. For instance, they ran a big pan-India summer campaign focused on cold beverages. Pretty smart for the hot Indian climate, right?
Makes sense.
They also launched a limited edition festive combo for Rath Yatra, showing some local sensitivity there. And, kind of fun, they hosted cricket-themed celebrations at key bars, bringing that stadium energy directly to travelers. So yeah, it's clear they're considering the entire customer journey, from booking right through to boarding.
So, okay, we've seen impressive expansion, innovation in the traveler experience, strong financials. How is TFS positioned in the, highly competitive airport market? And what's their long-term vision looking ahead?
Right. If we connect all this to the bigger picture, TFS boasts some very significant competitive advantages, what we sometimes call moats. According to a Crystal report, they are the undeniable market leader, holding a 26% share in India's airport travel QSRs, and an even more dominant 45% in the Indian lounge market. That's nearly half.
45%? Wow.
Yeah. And what makes it so difficult for others to compete? Well, it's their ability to navigate that incredibly complex, highly secure airport environment. That's not easy. Plus, they have long-standing relationships with airport operators. And get this, an impressive 94% contract retention rate since 2009.
94%.
It makes them the partner of choice, essentially. Creates really high barriers to entry for any newcomers.
They truly seem to understand the traveler's pain points, don't they, in that often stressful airport environment. How do they cater to such diverse needs? Someone rushing versus someone wanting to relax.
They've built what they call a one-stop F&B platform. It's designed to address pretty much every varied traveler need. So that means rapid service for those with tight connections, a really wide array of food and beverage formats for different preferences, price points for every budget, and comfort-focused spaces. Amenities like spas, even cinemas in some lounges, Wi-Fi-enabled work pods, and they even offer food at gate delivery now.
Food delivered to the gate, that's handy.
Exactly. And their deep expertise in managing multiple units, operating central kitchens, that's key to providing this consistent quality and variety across the board.
Okay, looking to the future then. What are the big growth opportunities they're eyeing? Where do they see themselves expanding next?
Well, the potential for growth is just immense. The Indian airport travel QSR and lounge industry, it's projected to grow at something like an 18–20% compound annual growth rate over the next decade.
18 to 20% CAGR. That's huge.
It is. And it's fueled by Indian Airlines placing orders for about 2,400 new aircraft, which will effectively triple the current fleet size. Imagine the increase in passengers.
Right.
Beyond airports, TFS sees significant potential in international markets too, building on their success in Malaysia and Hong Kong. But this raises an important question. What about outside airports?
Yeah, you mentioned that earlier.
Exactly. They're also eyeing the burgeoning Indian Expressway QSR market. There are plans for 1,000 new wayside amenities along these expressways. And this sector alone is expected to grow at an even higher rate, maybe 32–34% CAGR over the next decade.
Wow, that's a huge untapped market outside of airports.
Yeah.
So given all this, what are management's key priorities moving forward to capture these opportunities?
Their strategy is really built on three core pillars: growth, efficiency optimization, and earnings delivery. And underpinning all of that is what they call a people-first strategy. Recognizing their workforce is crucial.
Makes sense.
Practically, this means they aim to continuously optimize their product offerings, their service, to grow those like-for-like sales in existing spots, expand into new airport spaces, win more concessions at new airports, diligently scrutinize operating costs, and just ensure every investment they make is smart. Prudent capital allocation, as they call it, strategically sound.
And finally, what do their recent awards tell us about their commitment to operational standards, the traveler experience?
Yeah, their recent accolades really speak volumes, I think, about their commitment to excellence. They secured 8 honors at the 2025 FAB Awards, that's the Food and Beverage Awards for airports, including the prestigious Airport Lounge of the Year for their AAZia Lounge.
Okay, impressive.
And that recognition from Etihad Airways for their global lounge in KL, that highlights their global appeal and service quality too. Plus, being certified as a great place to work for 2025-2026, that demonstrates their commitment not just to customers but to their own employees, which, is often a strong indicator of consistent service quality down the line.
So wrapping this up then, what have we really learned from this deep dive into travel food services?
Well, I think we've seen a company that is not only financially robust and strategically expanding, but one that is also incredibly adept at navigating industry challenges, those headwinds we talked about, their continuous innovation in the traveler experience. Think Gordon Ramsay, the lounge tech, combined with a deep understanding of that complex airport ecosystem and an unwavering commitment to operational excellence. It truly sets them apart as a leader in this space.
Okay, here's a provocative thought then for you to consider as we close out. As global air travel continues its recovery and this unprecedented expansion, especially in dynamic markets like India, how might companies like TFS fundamentally reshape things? Not just how we eat and relax during our journeys, or potentially transform the very nature of the airport itself, from just a transit point into more of a destination in its own right, something to ponder next time you're passing through.